Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com. And in this video, I'm going to really walk you through what my perfect demand zone intraday trade looks like, and we combine it, demand and supply zones, and in this case the demand zone on gold with levels of support to really give you the best opportunity to trade at a level and the best chance of succeeding. Plus I'm going to go into some really kind of advanced analysis as well as some fundamentals. So starting off, first of all, as we always should on the fundamentals, and before we get into that, I just wanted to show you that this was a trade that was, posted on the 27th of April in our Discord trading group. So it's timestamped here. Here's the trade. We've got a few other trades there. I think that was pound yen that ended up working out quite nicely as well. So if you want to become a part of that, just go to trading180.com. Anyways, so the guys in the group had posted this trade and basically just wanted to see how this actually worked out. So let's go to a live chart and see what had happened. So you can see pretty much this is what it is. But let's break down why this trade, is the perfect trade for me. Right, so what you want to understand is something called capture pain relief trading, and capture pain relief trading is where you're trading basically the zero-sum game. So for someone to win, someone else has to lose. So what we have to do is we have to look for the strategies that other typical YouTube traders, 99% of these online traders trade, and they trade around areas of support and resistance first of all. And trading around areas of support and resistance, you can only really trade three main strategies, which is breakout trading, retracement trading, and level trading. Yeah, level trading. That's pretty much it. Yeah, if you're trading around a level of support and resistance. So we've got a nice resistance there. It should turn to what? Support there, which it did. Now, what we're looking at is areas on a price chart where those areas of support and resistance fails these traders. So it either fails the breakout trader, the retracement trader, and the level trader. Sometimes you get all three. But in this case, it was more to do with the top one, which is the breakout trader. So again, at the time, you had a nice resistance level, turned to support. It had worked there. Prices had convinced traders that prices had bounced off of there, so it was a decent area of support. When prices came back down to here, what you saw was traders looking to get long, here. But we're not really focused upon on the trader trying to get long. We're focused mainly on what is known as breakout trading. So you can see here on this 1 hour chart, there was a nice close below an obvious level. Excuse me. A nice close below that obvious level. Support should turn to what? Should turn to resistance, but breakout traders would be getting involved and taking trades short here. So we know that there are breakout traders here with the expectation that price should want to do what? Continue to the downside. That's what breakout traders are looking for. Now, as soon as they committed capital, and why would they commit capital? Because price action tells them to commit capital. They're going to sell. They have to sell. If they want to get short on gold, they need to sell. And why would you get short on gold? It's beyond me when you think about fundamentally what's going on in the world. For example, the virus, recession, global recessions going on. You've got the rekindling of China's trade war with the US, or the US with China, however you want to put it. So gold really is a buy, not financial advice, not at all. But typically what happens to gold in a time of crisis and uncertainty, fear, uncertainty and doubts and FUD, is prices should eventually go to the upside, as it is a safe haven asset. But anyways, getting back to this. So there are traders who don't understand the fundamentals and are just looking for a trade, get short. And no sooner have they got short and they've committed themselves, they end up being captured in their positions. prices start to go against them. Now, why would they be captured in their position? Because there's something called loss aversion bias, and loss aversion bias basically means it's where losses feel worse than gains feel good. So traders feel a loss more intensely than they would feel, than pleasure feels good. So what happens is that when you have that kind of bias and you have a stop loss somewhere above a market, let's say for example your stop loss is somewhere like there, traders who suffer from loss aversion bias, will end up moving and removing their stop losses. Because they can't accept the loss for whatever reason. Maybe they've, this is maybe the fourth trade they've taken and they're on a 3 trade losing streak and they've over leveraged, they've put too much on the trade. They think, they're certain. How many times have you been certain that a trade is going to work out, even though trading is a probabilities game? Nobody knows, what is going to happen with any single trade. If anyone did, you would basically bet everything on that one trade if you actually knew what was going to happen. Traders don't. So and there's a reason why we manage our risk, but this is not open for debate either, right? So all of you out there who are thinking to yourselves, no, everyone takes a stop loss, there are strategies and there are traders out there who do not trade with stop losses and who move and remove their stop losses. And if you don't believe me, then this is from a broker. This is the order flow, right? This is the order positions on a broker, and you can see up here, right? These are positions, right? So open positions, and you've got short and you've got long, and this is where current price of gold is as of the 16th. I think I'm recording this on. Is it the 16th? Yeah, 16th of May. Right. So gold is currently at 1742. Right. And anyone who is long below the market, so this bottom right quarter, below this green line, bottom right quarter is in the money. Because they've got long at 1710 and prices are currently at 1742. So if you've bought down here, you're currently in the money and you've got some unrealized profit. Now on the left hand side, bottom left, is everybody who went short, below this price. So at 1710, there are traders that went short, and these are open positions, and they are at the moment in unrealized loss. Let's go lower. 1625. There are traders that are short around there. These are open positions, from a broker. So this is not my opinion. This is fact, and it's not open for discussion. It's traders will be in positions and short positions in certain areas on a price chart if they haven't blown their account already, or if they're about to blow their account. So there are traders who are caught in their positions down here. And when they start to move and remove their stop losses, as prices go against them, they're feeling a lot of pain. In exactly the same way that these guys, if you're down here at 1285 in an open short position, and you haven't blown your account yet, you are, you're in a lot of pain at the moment. You are in a lot of pain. So let's continue going forward. So as prices go against these traders, lots and lots and lots and lots and lots of pain. Lots of pain. Now, anyone who went short down here, anyone who went short down here and has removed their stop loss is hoping for one thing. They are hoping that prices can come back to this area, to get some relief. So this is the pain phase, and they want some relief. And what does relief look like? Relief looks like, or takes the form of a smaller loss, rather than, if they risk 2, 3, 4, 5% and their account is now down 20, 30, 40% on this one trade. A bit of relief now looks like something like a break-even trade or their original loss. Maybe something like 4 or 5% now looks better than a 20, 30% loss. Now there's no guarantee that prices are going to come down here. Prices could just blow their account. But if price does come down here, and eventually it did, what do you think is going to happen? Yeah, what do you think is going to happen? These guys who gone through the pain phase and want some relief are going to do what? Exit their trade. And to exit the sell order, yeah, you have to press buy on your broker. And what is buying? Buying is demand. Yeah, it's demand. So we've got orders from these guys who have gone through the capture pain and now are on the relief, getting relieved from their pain, exiting their trade, and those are buy orders. That's demand. We've got new traders who are trading levels of support and resistance. Resistance, support should turn to what? Support here. They're entering new trades. So they're pressing buy on their broker, yeah, which is more demand. And then traders who are trading levels somewhere around here and here, and up here, who are taking profit, who've got short and maybe they're taking, they're entering new positions here, etc. And they're looking at levels to take profit. Where is the most sensible area to take profit? It's going to be at a level where there was previous support or resistance. Why? Because if you don't take profit here, you run the risk of seeing all of your profit that you would have made to the short side evaporate on a pullback, and nobody wants to be left holding the bag. They want to take profit as soon as possible and enter a trade for another day. So if they are getting short here, then they have to do what to exit and to take profit. They have to buy. So loads of demand, lots of buy orders going here. Demand. Yeah, lots of buy orders going on in this exact area. And the question you always have to ask yourself at a level is, why should there be more demand, or supply orders at a certain zone from a technical analysis perspective? Now, when you combine this with the fact that gold typically goes higher, right? So fundamental analysis and risk sentiment analysis, you have a tick in all of the boxes. Yeah, it doesn't get better than this. Does not get better than this. Now, did we know that prices were going to reverse here? No, nobody knows. But it's a high probability trade somewhere around here, if not within this demand zone where prices could end up reversing. This was the first area to look for a trade. If that trade didn't work out, then we would look for price within this demand zone for another trade to the upside if it gives us some price action. And how do you enter a trade like this? You can enter on anything. You can enter on a pin bar, you can enter on engulfing candles, you can enter on a pending order. It's up to you. But the main thing, the entry is not the reason why this trade or any trade fails or succeeds. What is the reason is that you've correctly identified a level of value, first of all, and the market agrees with you that this is an absolute bargain price. Therefore, prices are now up here. And look at the risk reward on the trade. A lovely trade, lovely trade. That was posted in the Discord group. So here we are. There it is, right there. Lovely trade on gold. And that's what we do pretty much every day. So if you want to take your trading really to the next level and understand many of the tactics that we use, this is just one of them. Many of the strategies that we use, supply and demand driven strategies, as well as fundamental and risk sentiment analysis, just go to trading180.com and sign up. There's a free course there. Gives you some limited access. If you want full access, you can join for less than £1 a day for the Discord group. All right, guys, take care. And until the next video, I'll see you soon and stay safe. So if what I'm saying resonates with you, why not check out trading180.com? There is a selection process to trade my supply and demand zone Forex strategy. I'm only looking to work with individuals with the right mindset, who are hard working as well. So check that out. and access really for less than £1 a day. Some of the strategies in here are not for beginners. So if you don't know what supply and demand is, please check out all of my supply and demand videos. I have hundreds of videos on YouTube, so you can check that out first. Guys, take care, and until the next video, have a good one.